Mental. This is mental.
This is Tim Bowen with the Steady Trade Podcast. How's it going?
The Steady Trade Podcast, Season 1 prize winners.
Hello, how are you doing? It's Stephen Johnson from the Steady Trade Podcast.
Hey, Stephen, how's it going?
I'm very good, man. How are you?
I'm doing great.
Awesome. Where are you calling from? I'm just wondering.
I am calling from Michigan.
Sweet. So is it the name Tim? Is it Tim?
No, Ryan.
Ryan. Sorry, I'm mixing names up.
My name is Tim, idiot.
I was just about to say, it's another Tim. Okay, Ryan. Where did you find out about the podcast?
I found out about the podcast via the StocksToTrade email list.
Cool. And have you been tuning in much? Have you been watching many episodes?
Yeah, I've watched all. There's 5, right? I think I've watched all 5.
Awesome.
Very cool. And is there a question that you have for the salty old veteran Tim Bowen before he gets too old to answer them, and we'll have to replace him with someone younger?
I keep trading these Alzheimer drug penny stocks. I keep hoping they're going to save me. Yeah.
Actually, I do have a question for you. It was one of the questions that I put into my answer for the podcast from yesterday. I just have to find where I wrote down my question.
I've got it, actually. Hi, Ryan. My name is Glenn. I'm the behind the scenes guy that works with Tim and Steven on this. So your question, you said a trading plan means taking calculated risks. I'm reading the right thing, right, Ryan? Does this sound familiar to you?
Yes, that is it. Yeah.
Yeah. So to elaborate, this encompasses the following, and then there's 3 points. 1, having a thesis of where you think a stock's price will go based on proven and consistently repeatable patterns. 2, evaluating your risk prior to entering a trade such that you know where to get out if the price does not move according to your thesis, thus minimizing any losses that you may have. And 3, setting a target goal so you know when to take profits if your thesis pans out as expected. Sounds like the core elements of a trading plan there, Tim. Is that right?
Yep. So yeah, very, very well put. You encompass kind of what, if I had to think about like a core concept of the strategy I recommend, teach, and use myself is exactly that. You go into this trade, first thing you do is you develop a thesis. Like you said, why am I trading this stock? Is it a fluff press release? Is it a fluff contract? Doesn't matter if it's fluff as long as you go into the trade knowing that it's fluff. Or maybe you're trading just because it's a squeeze. Maybe you're trading because it's a hot trend like marijuana or whatever. But you said it exactly right. You come up with a thesis. Then you use the chart. Ultimately, as momentum and day traders, the chart tells us everything. So you bring in the thesis, you put it on the chart, and you say, I'm going to assume for the sake of this example, you're buying a stock, you're going long, you're looking at the chart and saying, what is a good area of support where if that support area breaks, I stop out. Then you bring the loop together and you say, what am I risking? So say that's 25, 30, 40 cents. Then you decide, okay, my position size is X based on my risk. And in the end, do I have a realistic chance to make 2 to 3, 4, 5 times what I'm risking on the goal side? And then that's your goal. And then you take it. A good example is CLSN today. A lot of us in StocksToTrade Pro, a lot of traders all over were out of that stock early, but there's nothing wrong with that if it hits your goal.
Right, yeah. I actually traded CLSN myself, paper trade this morning.
Nice.
So.
How'd you do? What were your entries and exits?
Actually, it wasn't this morning. It was actually when we were on the phone earlier. Oh. I was right in the middle of it on the breakout at 4.
Oh, nice. Okay.
I saw that, yeah.
My entry was at 410. I waited for it to break 4, then I waited for it to pull back. I wanted to have at most a 10-cent risk from 410, and I was going to cut it at 4 if it didn't hold.
I like that. Whole dollar, half dollar. Yep.
And then I exited at 432 when it started to have a little bit of trouble in the 430s. And I said, you know what? I'll just cut it here. We're right around like 1 o'clock. This stuff usually fails anyway.
Very well.
So
very good point. Yep.
We don't want to give too much time, even though it did go up to, I'm seeing a high of 467.
Yeah,
so.
it could get interesting this afternoon. But what I love what you did there is, not trying to pat myself on the back, but you did exactly what I said. You're risking 10 cents. You had a 30-cent gain. You got your 3-to-1 reward. You moved on a crazy volatile stock that could fail this afternoon. Great trade. Solid.
Thank you.
Yeah, very cool. I don't know what more I would add to that other than the fact that I just say one of the best tips that I've ever took from Stephen Dux and Tim Bowen is that whenever you get into a trade, think about what can I lose first, or will I lose? Don't automatically assume something's going to be a winner, because it puts you in the wrong mindset to expect something.
Right. Yeah, I think I remember that. Duck said that in a video lesson or something like that, if I remember correctly.
Yeah.
This was like a few months back, I think. So yeah, I definitely agree with that. I think that's definitely good advice.
Is there a highlight from the episodes that you've watched so far? Is there something that you've liked that stands out?
I like just the juxtaposition of the comedy in with the facts and stuff like that. It makes it real interesting to listen to.
Awesome. Well, I tell you what, I think we've taken enough of your time, Ryan. I really appreciate the input, the comments, and I love this. I'm gonna retell this story many times, that you applied the trading plan philosophy. You applied the 3-to-1 risk to reward. You took quick gains on a volatile stock, all while you were waiting for us to call you to award a prize for the Steady Trade podcast. That's a great story.
And I just want to say that, Tim, you have took some of Ryan's time, and you do spend a lot of time waiting for the right setup to come around, which sets us up for the prize giveaway. Tim, please take it away.
So, Ryan, you are the winner. Basically, we had over 3,000 entries. We had 11 winners, and you are the winner of the Apple Watch.
Oh, cool.
So, you don't already have one, do you?
I do not.
Okay, and you're not one of those like crazy anti-Apple people, are you?
Nope. I'm actually talking to you on an iPhone.
Perfect. I was afraid you were going to be one of those Apple haters, and you'd be like, I don't want this stupid watch. So,
nope. I have an iPhone, I have a Mac laptop, I have a Mac desktop, and I also have an HP notebook. So I'm all over the place.
Perfect. So we can just integrate this into your ecosystem.
Yeah, and
so
one day,
for sure.
One day, StocksToTrade will be compatible on an Apple Watch, and you'll just be pressing the buy and sell from your wrist. Well, looking at the time.
That would definitely be.
Now, Ryan, you sound very much like you're on your way. You sound like you've got the right mentality to make them those top 10%. Hopefully we can call you back and see how you're doing in the future, if that's okay.
Yeah, please do. I'd love to talk to you guys some more.
All right. Well, thanks a lot, man, and we'll talk to you soon.
All right. Thank you, guys. Thank you so much.
No worries.
All right.
Bye.
Bye-bye.
Bye.
The Steady Trade podcast will return with new episodes and new prizes November 6th, 2017.